welcome to all of you. This is our one of our session. We are supposed to discuss about the return of income for the year of assessment 21-22 for the corporate sector, right? Then it may be include various type of entities, right? Especially if you concern about the company, there's a special situation with effect from 20 and 22 1, they have to submit their return on 100% e-service, right? All of you are having the experience from the previous year regarding that, but other than that, all other entities, you can select whether you are submitting the e-service or manual return, right? Then we are invite you, right, all of you, better if you are using the e-service, then easily you can complete your return by having the many type of guidance and informations. And it when it is developing the service, various convenient method already included. Therefore, if you use the service, definitely you would get the real benefit when you are submitting your complete and comprehensive return, right? Then all of the time you are really noted when you are submit your return, always you have to keen with that how we can submit the return with having completeness and comprehensive, right? If just think anyhow I will submit this, even if details may not perfectly correct, sometimes due to this informations system itself creating the assessment, right? If it is not so, sometimes officer may identified some incomplete informations. Based on this, then assessment may issue on future. But if you are submit complete informations, right, and comprehensive informations, with that when it is take the decisions, then officer may concern and evaluate properly with that complete informations. Most probably at that moment there won't be a unnecessary assessment based on your informations. Therefore, that point you have to very important to take it note and when you are submitting your tax return. First, we are discuss about what are the informations you have to complete when it is submitting your return. I will discuss this session by noted with the e-service as well as the manual return, right? Then if anyone, if you are use the e-service, you can get guidance with that video. And if you are supposed to submit your return on manual basis, same you can get the guidance for that as well, right? Then but anyhow, as I mentioned earlier, right, companies no any options, all the returns you have to submit through the e-service. Therefore, don't wait until last moment, right? Check whether your SSIDs are correctly work, is it active for this year, and you ready all the informations before you are start to submit, right? Don't wait until last moment to enter the everything at that moment, right? What you have to do is time whatever the informations you completed, better you can feed to the system until you submit, click the submit button, right? Such informations doesn't transfer to the department side. It is keep on your side as a temporary informations. Therefore, you can enter data, later you can amend and you can finalize your data with other professionals involvement or within your entity, right? Therefore, this return e-service you can complete step by step, right? Then ultimately you can find lesson, submit to the uh, department, right? And you have the many options, right? Then you can involve some other consultant as a tax agent, right? Then you can activate him to work on behalf of you, right? Then you can allocate some other persons to prepare this return. But ultimately, before you are submit to the department, approval officer should be review and finalize it. That is the requirement on this development in the Ramesh e-service submissions, right? Then all of you are well known that, right? Authorized person should be submit the return, right? Prepare just help to them, or tax agent just help to them. With that preparations, they can have some discussions, and ultimately you can finalize the return, and you can submit with the clear proper authority, right? Then uh, you have to mark whether your entity is resident or non-resident, and again you have to mark whether your type of entities, either company or public corporations or any other, right? Then that they would have some specific applications as well, right? If you are NGO, right, you can click this uh, ticks here, and you have to complete only schedule 6b, right? Others may not applicable, but sometimes if there's any other income, right, you have to consider for this, right? Then if not so, right, you can complete the schedule 6b, then you can decide the what should be the value you have to pay as a tax for the NGO, right? Then here just move into the return, but when you are using the e-service, before you are moving to the details of the return, you have to do the small test, right? By using this question, system try to identify what is real requirement for your company, right? Why they would have in the many number of schedules, right? 7 main schedules, they would have in another 2 additional schedules as well, then there may be a many sub schedules, right? Then you, if you are going to complete each and every schedules, you may get some more time, right? Then by concerning with when it is developing, provided some mechanism at the initial point, you can provide the answer for the few qualified question, right? 11 qualified questions. With that answer, system itself identified what would be the requirement for your company, right? If your company doesn't have any losses, you need not to complete the loss schedules. If your company doesn't have the qualified payment, you need not to complete the qualified payment schedule. Likewise, depend on the requirement, then identify the return and customize it and provide for you to complete the whatever the relevant schedules, right? Then within that shorter period, right, if you are having the informations readily available, then you can complete your return without taking many times, right? Then once you complete this question qualified questions, then system automatically provide the relevant schedules to you, then you can complete it, right? Then here I supposed to discuss the part A of this return, right? Then part of A of this return, they would having some summarized data, right? Without completing the respective schedules, you may not able to get in the summarized data, and you may not able to complete those cages, right? If you are just using the e-service, once you complete the schedules, so once you complete the sub schedules, right, automatically complete the schedules, then schedules values are completed, automatically take the value for the final cage, right? When you are doing the manual completions also, you have to use that flow, right? You don't just put in the value for the return, right? Firstly you have to do the completion of the sub schedules, then this summarized data should be put in the schedules, right? After completing the schedules, then summarized data you should bring it to the return. Likewise, that process flow you have to understand. Based on this, actually we can get the summarized data for the return, right? But for the e-service, you need not to worry about that, right? Once you complete those sub schedules and schedules, automatically this value bring into the final cages, right? Then you have to complete the schedule 1 to get the exempt amount, gain and profit. Then you have to complete the schedule 2 to bring the value for assessable income for each sources, right? Then automatically system take the total assessable income, right? Then you have to deduct qualified payment, right? Later we discuss what are the specifications with that, right? Then qualified payments are relevant for the company with the some specific conditions would be applicable, right? This uh, details would be rearrange and get the final value by using the schedule 3, right? You had first to complete the schedule 3 and bring the value to here. After that, after deducting this qualified value payments, then we can arrive to the taxable income. We can arrive to the taxable income. Based on this taxable income, right, we have to decide the tax on gain and profit for special rate, and tax on gain from realization of investment asset capital gain, and tax on balance taxable income. Those are we are calculated by using the schedule 4, right? There's a specific applications for the schedule 4 later we discuss, right? Then out of this taxable income, some of them are taxed at the special rate other than all the standard rates, right? Then as a present period standard rate is at 24%, right? Then other than all the taxable income which is applicable for this 24, we should take as a special rate, but for the specific identifications capital gain we can take separately. Then all other rate applications we provide in some specific space to enter these value and amount to be paid by concern with the respective code application, right? Then there's a separate schedule 5 for identification of tax on remittance. Schedule 6 is allocated for the two purpose, right? One is for tax on receipt of final withholding payment, other one is for tax on NGO, right? Then after completing the schedule 4, 5 and 6, then we can identify the total tax payable for case number 130, right? Once it is decided in the tax payable, then we have to concern about what would be the credit available for this particular company or entity, right? Then by using this schedule 7, we can identify the credit available for this entity, right? It may be a ESC, it may be a installment payment, it may be a foreign tax credit, it may be any other relief. Likewise, right, by using the schedule 7, we can identify the final credit available after deducting this amount against the case number 130 value. Then if there's a excess amount available, we can identify the refund claim, or if there's any amount to pay, right, then it should be the balance tax payable. Likewise, by using this summarized data from respective schedules, then we can decide what should be the final answer from this, right? After completing this, actually on manual return you have to check whether you are submitting the schedule 8 and 9, right? Then e-service, by using the respective path given, you can move into the schedule 8 and 9, right? As I mentioned, right, this is not a compulsory schedule, right? But with that development, right, if you are use the schedule 8 and 9, easily you can complete your tax computations, then you can complete your financial informations. Those informations will provide to the department with some given respective format, right? Therefore we invite to complete this schedule 8 and 9 to provide the comprehensive and complete return, right? Then we can move into declaration side, right? Section 2 is relevant for this. uh, Here there's a two part, right? First part related for the preparer, then second part is related for the uh, person who declare this tax return, right? uh, First we discuss about the first part, thereafter we can move into the second part, right? Then sometimes this some other person may use to complete this return with paying some value money, right? Then if so, you have to click yes. uh, and you have to collect the certificate from him, right, to confirm whether he get involved for this process. Then informations they have to enter, name, designation, telephone numbers and other details should be entered regarding this preparer, right, either approved accountant or any other person. Then part B is relevant for the normal authorized declarations from the entity, right? The principal officer, managing director, or director, secretaries, likewise any authorized agent would be complete this, and once it is complete this part, this return would be become a valid return submission, right? Then you have to complete this and uh, some submit to the department, right? Then but if you are using the e-service, those informations you have to complete, but issue with the signature. Manual return you can put the signature, no worries, right? But when it is submitting the e-service, how we can put the signature? Is it okay with the digital signature? No, actually how it is get identified whether this submission is valid one, right? If any authorized person by using this authorized SAID, if they doing this submission, it take as the submission is proceed by the authorized person, right? With that actually we identified there would have been some valid submissions, right? Then there's informations to complete this, right? Likewise this identifications we can have, right? How we can complete the schedule, right? This schedules having two parts, part A and part B. Part A is mainly concerned about the uh, respective schedules which attach to these calculations. Part B is mainly having tax computation and financial information, right? Those should be get understand. With that actually we can submit clear and comprehensive tax return, right? We discuss step by step how we can complete the each and every schedules. Okay. Right. Now we are going to discuss about the part A of the CRA return, right? Then actually you are getting some understanding about the return, how what are the things we have to include it, right? When you are doing the e-service, right, without much more effort, you can write the final answer based on the whatever the informations you would related with the schedules and subschedules. Right now we are going to discuss about the part A of the return. Part A of the return actually it is a part and parcel of the main return. Right, without completing the part A, you may not able to arrive the final answer for this income tax liability. Therefore, right, then you have to get understand what are the main things and what are the relevant things you have to complete when it is complete in the entire return, right? Then first we have to give the some small understanding how we can select relevant schedules, right? If you just refer with this para, right, you can identify it, right? There's a four compulsory return, compulsory schedules: schedule 2, schedule 4 and schedule 7. Those are the compulsory. Even if you are submitting the nil return, you have to submit the schedule 2, 4 and 7, right? Then if other than that, right, all the other, if just concerned about the other schedules, right, it it is relevant if there is any details to be disclosed, right? If not so, you need not to submit those schedules, right? If just concerned about the e-service, at the time of completing the qualified questions, right, once you provide the answer for the qualified questions, automatically system identified what are the relevant schedules and what are the not relevant schedules. As an example, if your company, you need to submit, you need to declare the losses, then definitely you have to complete the schedule 2B. If your company does not require to complete the qualified payment. There's no any entries to claim the qualified payment. Then you need not to complete the schedule 3, right? Likewise, depend on the requirement, you will decide which schedules are relevant for this submission. If it is relevant, you have to submit those schedules, right? Then therefore this selection is very important, right? Especially for the company, right? You have to provide the answer for the qualified question with understanding about the overall submissions, right? That's why I always pointed out that before you going to complete your tax return, you have to have some collected informations, right? At the moment when you are going to, when you are open, then if you trying to find out the details for the qualified question here and there, then one thing is that you are taking more time to complete it. Other thing is that, right, if you take the time little more, right, then system itself identified you are not working with the system, those schedules, then uh, they uh, they just show as a your submissions or your screen would take some time out issue, right? Therefore, right, always we have to point it out, right, before you are submitting, before you are going to submit in, all the informations you have to collect it, right? If you have the proper arranged collected informations, within shorter time you can complete it, right? Then here, right, when you are submitting this, right, first you have to select which schedules you are going to submit, right, which schedules are relevant for your submissions, right? Then on this table, right, schedule 2, 4 and 7 are compulsory, others are relevant. If then you have to submit it, right? Now I move into the first schedule, exempt amount, gain and profit or exempt profit losses, right? If there is any exempt amount, right, we have to complete this schedule 1. Schedule 1 is not directly relevant with the tax computation as this format, but if you are supposed to claim the exemption, definitely you have to declare it. If it is not declared, right, it seems that this income would be liable, right? Therefore, you have to properly identify where you have to disclose and what are the informations you have to disclose within this table, right? If you just concern about the 4 tables within the schedules 1, right, then 3 schedules, schedule 1A, 1B and 1C, you have to declare the profit or gain is claimed as a exempted. Schedule 1D is only we are using to declare the losses, losses which arise from the exempt amount, right? Then schedule 1A allocated for completing with exempt amount under the third schedules of Inland Revenue Act number 24 of 2017, right? When you are include this, right, you have to select the respective section, right? Then if you are use the e-service, just you click into the drop down list, right, then you can identify the relevant sections is attached with this exempt amount, right? You have to select, then quickly get in the descriptions, you need not to enter, right? Then you can enter the value here, right? But if you are supposed to submit manually, right, you have to find out the sections but you're going to claim the exemption, right, and they have to mention about the descriptions, then you have to mention about the amounts. Likewise, we can complete the 1A. Then 1B is related for exemption is still valid from Inland Revenue Act number 10 of 2006, right, due to transactional provisions, right, due to transactional provisions, some of the uh, exemptions still valid, right? Exemption which is related for 16C, 16D, 16E, 17, 17A, 18, 20, 24A. Those are the relevant sections. Then with that, whatever the remaining periods, they can claim the exemption, right? With that, they have to mention about the section descriptions, how many number of years they can claim, what will be the end date for this exemption. Then you can declare the amount regarding this, right? Then 1C is related for the BOI company, right? Due to BOI agreement, is there any exemption is still valid, then you have to complete this entry by mentioning the agreement name, date of the agreement, then number of years they can claim the exemption, and end date, right? Exempt amount and gain and profit, right? Then by taking the total, right? One subtotal from 1A, subtotal from 1B, subtotal from 1C, then altogether we can get the final exempt amount, right, for case number 10.0, right? Uh, then we can move into the exempt losses, right? Then all the by concerning all the uh, applications for the first three, right? If there is any loss, they have to disclose under the schedule number 1D, right? Then section description and exempt loss, right? Then likewise we can complete the schedule 1. We can complete the schedule 1. Okay. Then schedule 2 is relevant for the assessable income. This is very important schedules. This is very important schedule. This schedule 2 having the two parts, schedule 2A and schedule 2B, right? If there are any losses they are going to claim, then you have to complete the schedule 2B, right? Anyhow, for the all other case, right, they have to complete the schedule 2A. Then the final results of schedule 2A and 2B we have to take to the summary of the schedule assessable income, right? Summary of the assessable income. Actually, if you complete by using the e-service, right, there's a many guidance and many informations you can highlighted, right, within this screen, right, based on those guidance and informations, right, you can correctly and completely enter those informations for these cages, right? Then when you are going to complete by using the manual return, right, you have to little careful, and first you have to get the understand how you have to complete those cages, right? With that understand about this behavior and way of doing the calculations, right, then you can complete the return. Then always I have to highlight that when it is submitting the return, we we have to consider how we can submit the complete and comprehensive return. That is a very important things you have to realize, right? Then first we can just discuss about the summary of the assessable income. There's a two line. One is allocated to mention the gain and profit. Second one for total losses deductible. Total losses deductible. This is applicable for only business and investment. There's no relevancy for the other income. Then finally, we can calculate the assessable income from the business, assessable income from the investment, right? Then we have to get understand how those summary cages we have to complete. But when it is submitted the e-service, you need not to worry about the summary, right? Once you complete the schedule 2A and 2B, automatically those data bring into the summary table. But when you are completing the manual one, right, definitely you have to get understand how you can complete the schedule 2A, how you can complete schedule 2B, then final results of these two uh, schedules we have to take into the summary page of the assessable income, right? Right now we can move into the schedule 2A1, schedule 2A1 business income, right? then we have to find out the applicable economic activity code, right? Once you use the e-service, there's a drop down list. By using this you can identify the uh, amounts and value which is included on the this particular uh, table, right? Then first you have to enter the economic activity code, or you can select from the drop down list. Once you select this, automatically system take the value or price for description of this, right? Then we have to enter the turnover. Not only that, we have to enter the gain and profit, right? Likewise, we can enter those details which are related for the business. Then we can identify it, what would be the value we have to disclose under the business income, right? Right, second one, for investment income, right? Same as business income, same format we have to use for the investment income. Only thing is that when you are selecting the business activity code, when you are completing the business activity code, there's a few specific code relevant for the investment income, right? You have to find out what are the codes are relevant for this. So dividend, interest, likewise you can find out, right? Then you have to mention the name, nature of the investment, and you have to include the turnover and gain and profit. Then after entering all the informations, then we can take the total gain and profit from the investment. Right, next one for the other income, right? Similar application for the other income. Uh, they have to select if there's any other income, right? Other income in the sense, though they receive the income, there's no any way to categorize as a business or investment income, right? In that case, we can identify the other income. Then when they are going to include, right, first they have to identify the respective applicable economic activity code, right? Then based on this we can identify the nature of the investment. Then we have to enter the turnover and the profit, right? Turnover and the profit. Once we complete those information, then we can complete the first row of the summary of the assessable income. That we are complete, we can identify the gain and profit from investment, uh, business and the other, right? Likewise we can complete, and those informations we are taking to the summary. Okay, I think up to this those are okay. Right now we can move into the second part of the schedule 2, right? Second part of the schedule 2, right? Again we can move into the summary. Then we can complete the first line row by completing the schedule 2A, 2B, 2A1, 2A2, 2A3. Right. Now we are going to identify the total loss deductible. Right. This is applicable only for the business and investment. When it is applicable, there's some limitations as well. Right. Those things we have to get understand. Right. But though it is schedule 2 is compulsory, right? It doesn't say uh, schedule 2B also compulsory. No, it is optional one. If this company or if this entity, if they require to disclose, the losses, then actually they have to complete the schedule 2B. Right. Now we are going to discuss about the 2B. 2B is a little complicated one. Actually, all of you are well aware that as a provisions of law, right? Then deductions of losses are little complicated. Why? We have to identify each and every losses based on the categories, classifications, right? Classify based on the rate. Okay, then we can, if there's no way to deduct the losses, we can carry forward for the 7 years. Thereafter those losses should take as a expired one, right? uh, this is the fundamental application. and secondary mode, right? Then if there's some method or way to shifted the losses for the other areas. Sometimes we can shift higher rate losses to the lower rate side, right? Sometimes we can bring business losses to the investment side, right? Some specific application for the SMB with effect from the 21 to 82, right? Then there's some specific losses which arise from the investment incentive, and losses which related for the leasing company losses prior to 1st April 2018. Likewise, some uh, connected rules we have to discuss, right? Then if you are really use the e-service, right, there would have been some many uh, informations and many guidance, right? If you are going to enter some value, if there's any errors, system automatically identified and mention about this error. Likewise, some convenience way we are developing, right, to uh, simplify the complex situation by using the technology. But when you are complete the manual return, right, those things you have to get understand, and based on this understanding, right, you have to complete this schedule to be on correct and complete manner, right? Then I just explain what are the features available and how we can do the complete of this entire schedules, right? But if you understand the business one, right, others also same similar applications. Therefore, first we try to get understand how we can do the these completions, just only getting the 14% tax rate, right? Top of this 2b, top of this 2b, uh, we are identified the total loss deductible uh, by separating for the business and investment, right? Under this business, right, there's two separate identifications: loss which claim from the local source, and second one, loss claim from the taxable foreign source, right? There's a provisions or requirement to separate, get understand, or identified what would be the value which arise from the local source as well as the foreign source. These are same things applicable for the investment as well, right? Those summary table is automatically completed if you are using the e-service, right? But if you are going to complete by using the manual path, right, you have to get the final answer from respective tables, right? Then you have to complete the summary table, right? After getting the total deductible value, then we have to bring those final answer for the schedule to summary table, right? Then we are discussed about the 2b1 business losses, right? Then on this table, right, we are I selected 14 14 rate for simple understanding, right? Thereafter you can improve your understanding for the other rates as well, right? Then first we are having few rows allocated to brought forward losses, right? Brought forward losses we should identify it by separating with the respective year of assessment. It may be related for 1819 or 1920 or 2021. Why we need to separate, right? Those losses can be carried forward only for the 7 years. After 7 years, there's no options to carry forward, right? At that moment, if there's any loss remain, this amount we have to take as a expired loss, right? To get separate identifications, right, total brought forward loss we have to break up for each and every years. Those are relevant, right? Firstly we have to enter the loss, brought loss, then we can get the total brought loss. Right. If there's any losses which arrive from this particular year of assessment 21-22, we can mention as a loss during the year of assessment 21-22. Right. Then we can get the sum value. This sum value we can take as a total loss. This sum value we can take as a total loss. Right. Then by using those cages, we can decide, right, what would be the total loss. Okay. Then within this period, if there is a gain and profit within this year of assessment, if there is a gain and profit, then we can set off this total loss against with that profit. Right. It is within the same period, some undertaken, right, it may be creating the loss, some other business it may be create the profit, right. But if it is take one entity, most probably either loss or profit would created. Depend on the situations, we can complete the cages, right. Okay. Then with that those cages, we can decide, right, what should be the deductible value for this period, right. Okay. If there's no any adjustment you are concerned, right, once you completed cages up to gain and profit during this period, then we can decide the what should be the loss deductible within this given information. But sometimes within the given criterias, right, taxpayer may think how we can reduce the taxable profit by using the available losses, right. Available losses is not directly deductible, but by having some adjustment, we can use this available loss to set off again the profit. But at that moment, you have to have the clear understanding what are the conditions are applicable. What are the conditions are applicable, right? Uh, first one, we can transfer loss from higher rate to lower rate. We can transfer loss from higher rate to lower rate, right, within the business income. Then if, as example, if there is a loss related for the 40%, right, if we supposed to set off this loss against the 18% profit, we can do, right, we can transfer higher rate loss to lower rate and set off with the available profit. But we can't do the other way, right, we can't transfer lower rate losses to higher rate side. That's the restrictions. First one. Second adjustment, loss transfer to investment side. Right, there is a loss remain from the business side, right, we are not able to set off again the business profit, right, but there's option we can transfer this business loss to investment side, right, but we can't do the other way. Investment loss we are not able to transfer for the business side, right, we have two adjustment and two restrictions, right. Then third one, under the adjustment related for the specific losses, right, this is applicable for investment incentive and the leasing company, right. Later we discuss how we can decide this amount. If there is a special loss deductible, we have to decide those losses by using the separate schedules, right, table. Those final answer we can bring into this respective row, right. It may be related either may 14 or 20, 18 or 24 or 40, right, depend on way of nature of the business, right. Then after deciding those value, right, during the period there would have been some claimable value, then thereafter we can identify another amount due to the adjustment, then finally we can decide the loss deductible for this particular period from the business income, right. Then after this loss deductible, there's a separate cage for loss expired after completing the 7 year, right? There's no way to deduct this loss. Then whatever the remaining amount we have to expire. Then we can decide the carry forward balance. Carry forward balance, there should be a breakup, right? Year by year, we have to decide what should be the balance amount at the end of this period. This is normal applications, right? For every rates we have to complete by understanding with that behavior of this particular schedule, right? On with effect from the 21-22, there's a new application for the SMB. Actually, there's a practical issue, right? After identifications of this practical issue, right, then they would have in the changes with the provisions, right, then it is applicable with effect from the 21-22, right? What actually happened, if just first you try to get understand the what was the issue, right? If you think, right, there's a SMB company, right, previous year tax at 14%, right, due to turnover last period this company recognized as SMB, right, but this time their turnover exceeding the turnover threshold. Then what happened? Previous year 14%, but normally this year they had to pay tax at 24%. Right? By applying the normal rate, can they bring those previous year losses to the this year? It is prohibited. Why? We can't bring lower rate loss to higher rate. But actually, if you analyze those two periods is relevant for the one particular entity. Due to turnover, right? It is decided previous year SME, this year normal company, right? With that practical issue, right? It is allowed only for the SME which is identified for the previous period. Whatever the losses remain carried forward from the previous period without concern about these restrictions, we can bring lower rate losses to higher rate, right? Previous year lower rate, but this year normal rate, then we can bring lower rate losses to higher rate. How we can do this? Normal application we can't do by using this case number 20B16, sorry, 18, 20B 38, 20B28, right? Those cases we can use to cater for this requirement, right? But normally it is mostly applicable for 20B18, right? Previous year 14% rate is applicable. This time it may be a 24%, right? Then first we have to decide what would be the deductible amount within this year of assessment, right? Let's say under the 14%, 10 million losses they recognize the previous year. Out of 10 million, only 5 million they are going to set off with the this time 24% profit, right? Then what you have to do is you have to mention 5 million under this case number 20B18 case, only 5 million. Whatever the remaining value you can just mention as a carry forward balances. This 5 million, then this 5 million you should bring as a during the period loss for the 24%. Then normally you can set off this loss against the profit available within this period. Likewise, there's a solution provided to cater for this changes for the legislation. Right, now I move into next table 2B2 special loss deductions. As I mentioned earlier, first two row is applicable for investment incentive, right? For the first time right? If they are invest, then for the new company, right, they can claim the investment incentive. After claiming the investment incentive, if there's a loss created, right, we have some special applications we can carry forward for the 10 years time, right? For cater for this, then there's a separate row for these applications. Out of this identified loss incurred during this period, we can claim some amount, then balance part we can carry forward to the next period, right? Within 10 years they can claim the entire value, right? Due to based on the investment value, right, this 10-year would be increased up to 24 years. Same applications, we first identify the loss incurred value, then during the period if they able to claim we can mention, then if it is not so, then we can mention as a carry forward balance, right? Then in addition to these two, right, if there is any loss which related for the finance lease, actually it was arise as a provisions of previous income tax provisions. At that moment, for the leasing company, they can claim the capital allowance for entire lease asset, right? Due to this, most of the leasing companies would create in the loss, right? If there's a loss, still it is allowed to deduct those loss remain, right? Then it is separately identified losses available, brought forward one, then during the period losses, then amount claim and the carry forward balance, right? Another amount of loss claim columns, we can identify the final value, total specific loss deductions. This particular item value should be bring into the schedule 2b1 under the business losses. We can mention as an adjustment, right? We can deduct the value, right? Once you complete these details for the e-service, automatically they are taking this value to the 2b to b1, but you have to select where you are going to claim under the 14% or 18% or 24%, right? Then we move into the schedule 2b3, investment income, investment loss. Same applications like business. Firstly, we have to identify the brought forward value. Then we can identify the during period loss. Then we can identify the uh, total loss value. Out of this, we can set off again the investment gain and profit, right? Then we are classified under the 14% and normal rate application, right? After that, we have to cater for the some adjustment, right? Here also we can bring loss higher rate to lower rate. That application is relevant here, and whatever the loss transfer from the business income we can take to here, right? Then under the 14% or 24%, whatever, right? Then we can bring into here those loss, and we can set off again the during the period profit or gain or profit, right? After these two adjustment, we can decide the total loss deductible, and if there's any expired one we can mention. Then finally we can decide the carry forward balance. Carry forward balance should be having the breakup for the 4 years: 1819, 1920, 2021, and 2122. Right, next one, table 2b4, foreign losses. Foreign losses, we are going to identify it separately for the business and investment, right? Separately for the business and investment. If these source are exempted, we are not taking to here. If it is not exempted, those losses we have to take it here. Same as previous, we have to identify the brought forward with the breakup. Then during the period losses we can recognize, then total losses we can identify it, right? Then after that, if there's any foreign gain or profit available, taxable one, then we can mention. With that we can decide the loss claimable within this period. But if there's any adjustment is required within this to business and investment, we can bring business losses to investment side, but other way is not allowed, right? This is the only one adjustment we can see. After doing the adjustment, finally we can decide the loss deductible amount, right? Then expired one, if it is so, then we have to enter and remove here. Then remaining amounts we can take as a carry forward balance. Then within the 4 years time, 4 years we can do the breakup. Then finally we can complete this foreign loss schedule as well, right? After completing those final value, all the loss deductible, we have to take to the final summary under the schedule 2b, right? Final summary and 2b. Then after completing this summary, we can take the total loss deductible for the business and investment. These two we have to take to the summary of the schedule 2, right? Then when you are going to complete on manual return, sometimes you would having some complexity, but if you are use the e-service, definitely you get some convenience by having the many messages, many indications, many informations, and technology is used to simplify those complex situations, right? This is a very good example for this schedule B is a very properly established, and if there are any errors, quickly pointed out, then you can complete your submissions with correct and complete manner. Now we are going to discuss about the schedule 3. Schedule 3 is connected with main return, right? This final answer for this summary page is connected with the return. Out of this total assessable income, right, we have to deduct the qualified payment is deductible amount, then we can arrive to the taxable income, right? If you just see the summary, right, summary table, there's a two part, right? One part is related for the payment made during this period, right? This is really connected with the number 24 of 2017 Act, right? Then second part is related for the any remaining value at the end of the 1718, which connected for number 10 of 2006 Act, right? Then at the transactional period provisions, right, then there is a specific application for the whatever the remaining balance from the previous from the at the end of the 1718, right? Then what we have to do is as for transactional provisions, then whatever the remaining balance, still we have to apply the provisions which is applicable for previous income tax law. Number 24, number 34 is section 34 is applicable, right? Then each and every table we are identify the deductible amount. This deductible amount is directly connected with this particular table, right? Then table A deductible amounts here, table B deductible amounts here. Likewise, every tables we identify the deductible one. This deductible one should be entered here, right? Then when you are using the e-service, you need not to worry about this. Once you complete the respective sub table, automatically this table, summarized table is calculated, right? Then you can identify the total deductible one. Once we completed this, ultimately we can identify the total deductible under the case number 60.0. This 60.0 is directly connected with the return, right? Then we are going to discuss about the item which related for number 24 of 2017 Act, right? Then due to amendments, we had new two items here, right? Earlier there's only 3 deductions we can identify, right? Those 3 deductions, there's no any options to carry forward. But if you see the new one is able to carry forward based on the available provisions, right? Firstly we discuss about these 5 items, thereafter we can move into the balance part of this table, right? In first one is related for the donations made to the approved charity, right? If any entity, if they made donation to the approved charity on cash, right, then 1/5 of taxable income or 500,000, whichever is lesser, we can identify it as a limit, maximum limit. Then we have to get the actual value and we have to get these limitations. Then ultimately we can decide the amount deductible, right? If this decided value, what we have to do is we have to take to the table. A table first line we can complete it, right? Then B, donations to the government or specific institutions and balance if any cannot be carried forward, right? Donations made to these institutions, money or otherwise, here they can consider as a qualified pay, right? First we can identify the actual amount, then limitation is 100% of this expense they can allow to deduct it, right? Always when you are going to deduct, there's only limit. We have to consider whether there's enough value to deduct it, right? Then table C is only applicable for the public corporations. If they paid some money to consolidation fund or president fund, those value can be considered as a qualified payment. Then we have to identify the amount incurred or amount remit to the this particular funds, and 100% of taxable income is able to deduct it, right? Then likewise we can complete the first three. Thereafter we can move into the fourth one, right? Fourth and fifth one. Fourth D1 and D2 is newly added one, newly added to table here. D1 is applicable only for the financial institution, right? To base to cost of the acquisitions and merge of the financial institute, we are going to consider here, right? This expense should be confirmed by the central bank, right? Then 1/3 of expenditure are able to deduct within the 1 year time, right? If there's a once you going to deduct it, always you have to consider whether there's enough value to deduct it, right? Then once you going to apply e-service, those conditions, those limitations are highlighted, and when we are enter the value, right, by applying those conditions, they pointed out that this amount is not a correct one. Likewise, some convenience way they are provided. Then 2D is a newly added one. This is applicable for the film industry, right? This year onwards, actually, this table is applicable. Uh, don't mix up with the previous one, right? 2006 Act also there's a same type of table, but this one is newly added for this particular period. Right? We separately identified the newly added items as well as the previous qualified payments is applicable due to the transitional provisions, right? If you see this, there's a three expense are considered for this qualified payment. Then cost of production of films, promotional expenses not less than the 5 million. Cost of upgrading the cinema, 25 million is the limit. Cost of constructions and equipping of the new cinemas, right? Likewise we can identify these three expenditure, right? There won't be any brought forward one. Why? This is the first year, right? Then during the period they are incurred some value, then out of this we can identify 1/3 of taxable income. Then we can identify the amount we can claim. Then if there's an excess one, there's options we can carry forward. We can identify it separately and carry forward here, right? Then likewise we can complete the first part of this qualified payment by discussing about the new applications which are related for the section number 24 2017 Act. Now we are moving to the second part of this our discussions for qualified payment, right? Then second part is actually identified if there's any balance remain at the end of the 1780. Balance remain at the end of the 1780, right? If there's a balance as a transactional provisions, we can apply the table or these provisions for deducting these amounts. Then first we can discuss about the item number E. This is actually related for expenditure incurred by the any person, any entity for a government development plan, right? As the previous provisions, this type of expense are allowed it. Then if there's any brought forward one, we can consider here, right? Then if there's any brought forward one, we can consider, then 1/5 of taxable income we are able to deduct it, but depend on the available value to be deducted, we can decide the amount deductible, right? If there's any carry forward one, we can mention as a carry forward amount. Then we can concern about the table F. Table F's are relevant with mainly relevant for the film industry. In addition to that, last one 100 million is applicable for the new undertaking. Then first three is relevant for the film industry. Then 10 million cost of productions or cost of upgrade in the cinema. Then 25 million is related for cost of construction of the cinema. Then 35 million is related for the cost of the production of film and promotional expenditure. And then if there's any brought forward one, right, we can mention here. Then we can decide the deductible amount depend on the available amount to deduct. Then if there's any excess one, right, we can mention as carry forward. Then last one is related for new undertaken. There's a 100 million limitations, right? This is also having some brought forward value. Then depend on the limitations and available amount to be deducted, then we can decide the deductible value. Then if there's any carry forward one, we can mention as a carry forward one. Then if you concern about the D, D is related for donations to the government or specific institution. Then previously also we discussed under the first part table B on same application, but this is a two different application. This one is able to deduct, and if there's any excess one, we can carry forward. But if you just concern about the table B, there's no such a carry forward application as well, and this is still applicable depend based on the previous income tax law number 10 of 2006, right? Then we can identify the brought forward value here. Then if value permitted to deduct entire amount, they can deduct it, right? No any restriction here, right? Then if it is not able to deduct, then we can carry forward this whatever the remaining amount. Then last one for this qualified payment previous part. Then H is the next table here. Then there's a limitation 1/3 of the assessable income of 300 billion, whichever is higher one we can take as a value, right? If it is not so, then we can do the carry forward application. This is applicable for cost of acquisition or merge of any bank, financial institution or any leasing companies, right? On these provisions, there's no any requirement to get the certification from the central bank, but if needed, a department needed, then it may be concerned how we get the required verifications. But this is applicable for brought forward one. It was happened before 2018-19, right? If it is a carry forward balance, then out of this we can identify 1/3 of assessable income or 300 million, whichever is higher one. Then depend on these conditions, we can decide the amount deductible. If there's any carry forward one, we can mention as a carry forward balance. By getting these answers, every table having the amount deductible, those deductible we have to take to the final table. Then we can write the total deductible value. This total deductible value we should include in case number 60, right? Then actually if we are using the e-service, it is very convenient, right? They are providing many guidance, many messages when you are fill the, fill, fill the data. And once you complete this sub table, automatically summary table as well as the return will completed. This is a very convenient way if you are using e-service, but definitely for the company you have to use the e-service. For other entity you have the options either e-service or manual, but always I emphasize that if you are use the e-service, definitely you would get in the benefit and convenience rather compare with the manual return, right? Then we can concern about the schedule 4. Schedule 4 is a compulsory one, right? Schedule 4 is a compulsory one. This is very important table you have to complete. Why? Depend on this, finally we can decide the tax payable, right? Then if you see this arrangement of this table, right, then only two rates we can show here, right? First one, gain or realization of investment asset. If there's a capital gain, you have to mention the value here, then you can apply the rate, then you can decide the value. The last one is allocated for balance tax payable at the rate, normal rate, right? Standard rate for the company is 24%, right? After allocating the rates for specific applications, whatever the balance remain, we can take as a final balance taxable income that is applicable for 24%, right? This is a final balance value. But before that, due to separate undertaking or due to some specific applications, right, then they would have in some different tax rate. How you can include it by using the code which allocated for each and every rate, right? Therefore you have to identify what are the codes that has applicable for this specific rate application, right? Then you can see the guidance, see the relevant code from list provided by the IRD web portal, right? If you go to the download under the forms and return, you can identify the table here, right? Based on this table you can decide which tax rate is applicable, which code is relevant for this, then this code you have to enter here. But when you are doing the e-service, you need not to enter the code, right? There's a drop down list. By clicking on this respective table, then automatically system take the narration for this and automatically take the rate for this particular application. Then you only just need to enter the value here, then system itself calculate the tax payable also, right? This is a very convenient way it has developed. Then uh, other than these two, right, every applications we just take as a specific rate, right? Depend on the codes you can complete this application. Then one new thing I need to note at, right, there's a 25% deductions that would be applicable for agro farming. It was effected with effect from 21-22. How we can apply this? There's a separate code for this. Then you have to identify this code by referring with the respective list. Once you click this, you can see the narration, but there won't be any specific rate here. What we have to do is, normally it is apply the 14%. Out of this 14, we have to identify the 75%. Out of 14, 75% is 10.5% is the effective tax rate. By just enter the effective tax rate here, then system itself calculate the value, right? Likewise you can complete your application, right? Anymore, right? It is not able to find out this any codes, then there's another codes allocated, right? Then if you think, right, this should be the applicable rate, then you can just click this uh, one and then you can enter the rate here. Likewise you can complete this table. This table is very important one, right? And this table is a compulsory table. You have to complete this table, then only your return is valid, right, complete as submissions, right. E-service, once you submit the entire set of this, automatically this table is also included. You need to worry about that. But when you are using the manual path, you have to compulsory submit schedule 2, 4 and 7, right. Then we can move into schedule 5. Schedule 5 is allocated for tax on remittance. This is applicable for non-resident entities, right. If there's any transactions that has related to remit those money from here, at that moment they have to consider about this tax on remittance, right. Then there's a classification of this particular type of remittance, right. Then we can identify the total gross remittance. Based on this total gross remittance, we can identify the tax payable. Then you can enter the amount of tax paid, right. If just only complete this summarized table is not enough, what you have to do is you have to enter the entry by entry details, right. Then if within this 1 year, if this particular entity is remitted 5 times, right, then every 5 entries should be here, right. Date of remit, amount remitted, uh, remittance tax payable, remittance tax paid, and what would be the date they paid those particular payment. Likewise, every entries they have to complete, then this total uh, value should be reflecting here. If there's any difference, then system itself get the higher value and proceed it. Therefore you have to careful, right. You have to enter the entries, it should be tallied with the summarized data, right. Then you can complete the entire applications, right. Then actually we can move into the schedule 6. Schedule 6 is having two purpose, right. Schedule 6 having two purpose. One is we are allocating one table 6A for tax on receipt of final withholding payment. Then 6B is allocated for tax on receipt of gain, donations, etc. for NGO, right. Then NGO also they have to submit their return by using this format, right. Then if this NGO just only having a receipt of grant, donations, etc., then they have to only complete this 6B table, and they can able to submit this return here to the department. But other than that, if there's any investment proceed they received, right, based on this they have to calculate the tax applications in addition to this schedule 6B, right. Then schedule 6A is mainly focused to identify the tax on receipt of final withholding payment, right. If just concerned about the final withholding payment, mainly we have to refer with the section 88. As a section 88, as a present period, only two items we can identify. One is for receipt of win from lotteries, betting and gambling, and second one is payment made for the non-resident. Only those two we can take under this category. Then if just think, right, this particular entity would receive the lottery, right, they have to complete this 6A table, right. Then this lottery would be received after deducting the withholding tax or before deducting the withholding tax, right. If they receive after deducting the withholding tax, there won't be any further tax to be paid. Only they need to just enter the value here for case number 120.a.2, right. But if you receive this income without deducting, what you have to do is you have to firstly complete this break off table, right. This is only allocated for tax not deducted payments, right. You have to enter the details, and you have to enter the rates here. That is very important, right. Rate would be the difference, right. But for the lottery always we are applying the 14%, right. But if on this case actually we can straightforward say, right, rate should be the 14%, right. Then based on this, they then calculate the amount payable, then it should be complete the summarized table, right? Then schedule B, 6B is related for the tax on receipt of gain, donations, etc. to the NGO, right? This is only applicable for the NGO. Then they have to identify the total amount received on this category. Out of this total amount received, 3% of the amount received as identified as a team profit. 3% of out of this. Then based on this 3%, we have to apply the 24% tax. 24% tax, right? Then they have to pay the particular tax. It's a tax paid as a additional tax, right? Then by applying this rate, then ultimately we can identify the tax liability. This amount we can take to the summary table. Then based on this summary table, we can identify the tax liability on the tax return, right? Then right, we can discuss schedule 6. Now we move into the schedule 7. Right, schedule 7 is also a compulsory one. This is very important, very liquidated point. Why this is mainly concerned about the tax credit, right? Once you complete this, you need to very keen and correctly enter the value here, right? And if you are not correctly enter, sometimes your entire your tax liability may be changed, right? But the balance amount may be changed, right? Therefore, this points very important. If you see this table, there's a two part we can identify, right? One item, three items allocated as a non-refundable credit, other other five items is allocated as a refundable credit, right? What is the main purpose of this separation? Refundable credits are directly goes to the taxpayer ledger. Actually there's a payment of credit which is directly connected with the taxpayer ledger, and most of them are directly connected or related with the refunds if there's any excess amount available. But if you just concerned about the non-refundable one, those are the credit, but there's no any way to get in the refunds, right? If you see the foreign tax credit or any other relief or ESC deductible, right? Those are not able to get in the refund within this period, right? If it is able, we can set off with the liability, but if it is not so, there's no any way to get the refunds, right? Then with that purpose, there's a two separate categories we can recognize. Then foreign tax credit or any other relief, ESC, you can take it, and then we can get the total non-refundable credit. We can take under the 140.8. Then if you see other relief, there's a footnote here, right? 12 is applicable, but it says that uh, please attach the relevant details, right? If you are mentioned under the other relief, you should provide the details, right? So very specific things may be applicable, right? If you are going to do this, you have to provide the details. But some of them are uh, just put the value, how they take this, if there's any refunds available from the previous period, right? This particular amount just they trying to put on this other relief. That is not the correct way, right? If there's a refunds available from the previous period, there's a separate place you can mention, right? 140.c is allocated for this, right? uh, then once you enter the value under C, and you try to reduce the tax liability, it won't be happen. Why? This is the just declaration to the department, right? If just having the refund, it doesn't say entire refunds may be set off with the liability, right? After finalizing the refund, then we can decide what would be the amounts which remain to set off with the next year, right? Until that, just a value available, right? After finalizing this, we can confirm, right, there's a value to use for the set off with that liability, right? Therefore, please note that you should not enter any previous refund under the other relief. Then if you just concern about the tax paid on remittance and tax paid on realization of investment asset, then without tax credit, SA payments, tax paid as an additional tax by the NGO, those are separately we have to mention, right? Actual value should be there. Then those amount is reflect in the taxpayer ledger, right? If you are not correctly mentioned, depend on this taxpayer ledger, final value will be taken when it is issued the assessment, right? Then another schedule 7, we can identify a few subschedules. Schedule 7A is related for the ESC, economic service charge. This is the last year we can take the credit, right? 1920, only 3 quarters is liable for EAC. Thereafter, this was abolished, right? Therefore, this is the last one. Last year, they can take credit under the EAC. Then 7B is allocated for the withholding tax, non-final withholding tax. Presently, it called as the advance income tax. This is just summary is used to having some snapshot view, right? In addition to that, if there's any credit available, then you have to upload the withholding schedules, right? After getting verification by using the verification tool, right? Based on this uploaded schedules, ultimately decide the amount you able to claim, right? By using this 7B schedules, you can provide the summary based on the rates, right? And this brought forward one during the period's deductions, claim during the period, then carry forward amount is able to declare, right? Those are the main 7 schedules. These schedules directly connected with the tax return, right? Directly connected with the tax return. If you are entering the value here, then there would have been some final effect with the liability, right? Therefore, those are properly prepared and completely and comprehensively uh, complete this detail, and you have to submit it. That is very important. Then after this our discussions, we will able to move our concern for the schedule 8 and 9. Now we are going to discuss about the schedule 8 and 9, right? If you see at the bottom line of this return, there's a separate place to click whether you are submitting schedule 8 or 9, right? Part B, computation of financial informations, and schedule 8 for the computation sheet, schedule 9 for the financial information. So you have to click this, right? uh, if you see this part B of this return, at the top of this it says that as a section 120A, right, if there is a uh, any exemption or different rate, right, you have to submit the separate accounts, right? For that purpose, this format is not supported, right? If so, then you have to definitely attach the uh, separate tax computation, right? Then schedules 8 is mainly focus how you can provide your tax computation, right, based on the direct method. Based on the direct method, why it is use the direct method? One side we can say, right, as a provisions of law, then section 10, 11 and 12 to 19 and other computations sections, then it is supported to get in the direct details for regarding this computation, income and expenses, right? So once other side, then once you give the your income and expenditure on clear manner, right, reviewer is able to get in the informations correctly, you on your side also, without any much more hassle, right, much more complexity, you can complete your data for this preparation. Then there's a benefit for the both side, submit taxpayer as well as the department getting the real or clear information regarding your deciding the assessable income. That's the main purpose of developing the tax computations on direct method, right? uh, on this table, having computation having uh, mainly allocations for the business computation and investment income calculations, right? Then first table is business income, right? If you can see, there's a separate allocations for this income side, right? As a section, then you have to get in those information. Then total amount derived we can identify it. Then you can remove the exempt amount and final withholding payment. Those payments are already included under the total amount derived, right? If any exemption, if you are not added to the total amount derived, you are not able to remove here. But normally, first you have to declare the entire income. Out of this, if any income exempted, if any income take as a final withholding payment, those amount you have to remove here, exclude here. Then you can identify the net amount derived for case number 2000, case number 2000, right? Then after that, we should disclose each and every deductions, right, separately, by providing the respective section and descriptions. Then what is the amount you are going to deduct it, straightforward disclosure here, right? Then for specific deductions, there's some separate subschedules are developed available, right? If it is having some industry level or company level, if there's any other deductions, by using the blank space you can enter the your data, right? Then you can complete these preparations. Ultimately, we can calculate the assessable income from business, right? Firstly, we are concerned about the schedule 8A, right? Subschedules by subschedule we discuss and try to get the understand about this. Schedule 8A is related for, uh, actually it is related for income side, right? Just having reconciliations with the accounts, right? Then gross amount as per the income statement. Then business investment and other income we are already recognized. Then if there's any additional thing, most probably it would be the excluded amount. Likewise, there's a small reconciliations that has introduced for this schedule 8A, right? Then we move into the next subschedules, right? We can start with section 13. Section 13 is related for the allowance for trading stocks, right? Then schedule 8B is allocated for this, subschedule is allocated for this, right? It is not much difference with your calculation for cost of sale, but there's a few difference we can identify, right? But format of these preparations are same. We can start with the opening balance, we can add the cost of purchases, then we can reduce the closing balance, right? Then ultimately we can decide the allowance for trading stocks. uh, if just really concerned about the section 13, as well as by comparing with the cost of sale, then most of the format are same, but only difference we can identify it, right? Once we decide in the value for the closing stocks, if just concerned about the accounts, how we can decide it, we can compare cost with the net realizable value. If just concerned about the tax, we have to compare cost with the market value. That is the difference between the account applications and the tax applications, right? When it is concerned about the accounts, right, we can concern estimated sale price and estimated sale expenses, right? then we can identify the net realizable value, right? But when it is concerned about the taxation, just it is compare with the estimated market value, right? That is only difference we can identify it by comparing these two, right? Anyway, right, based on this schedule 8 we can identify allowance for trading stocks. This amount should be take to the this main table of this tax computation. Then section 14, repair and improvements. Section 14, repair and improvement, schedule 8C is applicable, right? Under schedule 8C, under schedule 8C, getting some value for regarding this expense incurred, then written down value at the previous year. Based on this previous year written down value, we are able to decide the amount allowable, right? Then we can identify the amount deductible, right? Amount incurred we can identify, right? Written down value of the previous we can decide, right? Amount allowable is able to deducted decided, then ultimately we can decide the amount deductible, right? Then here there's a 5 classes, right? Then based on the category of the asset we can decide the amount, right? Actually with effect from 2021, right, only we have to concern about the improvements. Now presently we can charge entire repairs to the repairs as a normal expense incurred within this period, right? But this time keep the topic without change, right? Sometimes it may be have effect with repair and improvements as well, right? Then based on this class of asset we can mention when it is calculating the amount allowable uh, uh, depend on the previous year written down value, right? We can decide it. Class 4 asset only we can use the 5% rate, right? All other classes we can identify this amount as 20% of the written down value of the previous year, end of the previous year, right? Then there's a very important thing, if there's any additional amount or any amount excess more than this particular deductible one, then this amount should be added to the depreciation basis of this particular asset, right? Added at the beginning of the next year, right? Then we can move into the research and development, right? If you see the main table of this business calculations, then research and development and agriculture startup both are is connected with the same section, section 15, right? Similar applications, right? We'll see the respective table here, table 8D and 8E, right? 8D is related for the research and development expenses, right? Then irrespective of capital or revenue, right, if those expenses are related for this area, they are able to calculate, able to claim it, right? But those informations they have to provide: nature of the business, type of the research, name of the research institution, and amount incurred, and ultimately decide the amount deductible, right? Then same as schedule 8D, 8 is allocated for the agricultural startup expenses. This is also irrespective of whether capital nature or not, they can claim the amounts if it is connected with this particular nature of the nature of the expense, right? They have to provide the details for type of the expenditure and amount incurred, amount deductible, right? Then you may having some concern if there's a research and development, we can apply the schedule 6 temporary concession, right? If you see main calculation of the business, there's a separate allocation for the temporary concession, right? Those separate allocation you can use to get the bonus 100% deductions for research and development, right? Then schedule 16 are allocated for capital allowances and balancing allowances. Then schedule 8F and 8G are relevant for this, right? We'll move into this area. Schedule 8F, capital allowance on asset acquired or no after 1st April 2018, right? Then capital allowance, if it is asset acquired after 1st April 2018, we can identify based on the class of the asset, based on the class of the asset, right? Then first you can identify the description of the asset, then depreciation base asset 31st March 2021, right? Then acquisition cost excess from the section 14. When we discussed earlier, we mentioned if there's any excess, it is able to add for the depreciation basis, right? At the beginning of the first next year, it is able to add this, right? Then ultimately we can calculate the capital allowance during this period, right? On here, it is supposed to get the bulk value, right? Then total amount which related for the each classes, right? And this time we add the new class earlier only have the class 5, now we add as one row as a class 6, that is the recent tax provisions, right? This is applicable for the milk production machines, right? Then we this time onwards we have in the 6 classes. Based on these classes we have to calculate the capital allowance, right? Then total amount deductible is able to identify it. Right, next capital allowance on asset acquired prior to 1st April 2018, right? Before starting this Inland Revenue Act number 24 of 2017, right? Then previously it was applicable the number 10 of 2006 Act, right? Then there's a two different tax provisions, right? But there's a some asset they already purchased before this date, still they can able to claim the capital allowance, right? To get the summarized details, there's a separate table for this. Then you have to enter the cost and you have to mention the amount claim up to 31st March 2021. Then during the period claim we can identify it, and if there's any balance amount is able to identify it separately. But depend on this identification, under the first table capital allowance claimed during the period, total amount we can take it. On second table, amount claimed during the period, again we can identify both aggregate value we should mention on total capital allowance claim for the year of assessment, right? Then schedule 8G is also connected with this asset movements, right? Then within this period, if there's a disposal and ultimately if there's any loss would created, then we can able to identify the balancing allowance, right? Then here they have to enter the data separately for each and every asset, right? Date of the purchase, description of the asset, cost of the asset, capital allowance claim, and written down value of the asset, then consideration received within this period. Ultimately we can identify the balance in allowance for this period, right? Then total amount deductible we can able to identify, right? Then here schedule 8H is related for the loss on realization of asset and liabilities, right? If you refer with the section 17, some of the asset and liability they use for the business, once it is disposed they would create in some losses, right? But these losses mostly may be a capital nature losses. As a normal provisions which under the sections 11 are not able to deduct these losses, but due to provisions which related for the section 17, it is able to deduct the loss, but this asset and liability should be used to the production of income, right? Then depreciation of description of the asset we can take it, then cost of the asset and considerations, ultimately we can identify the loss claim from this particular asset disposal, right? We can take the total amount. This total amount should be included on the computation, business tax, business income computation, right? Then if you just see the main computation, right, all the sections we complete up to this point. Then section 12 and 18 is separate schedule for there, right? Schedule 8J, right? We will discuss and come here, right? Schedule 8J, that is related for the finance cost, right? That is related for the finance cost. Then earlier we need to separate, this is applicable for the manufacturer and non-manufacturer, but with the recent tax amendment it is not able to categorize those two, right? Only one application for the all the entities. And if this is only applicable for the company, why? There should be the share capital and reserves, then only we can apply the schedule section 80. Then normally we are identified this business and investment application, right? We have to identify the total final cost incurred within this period. Then if this borrowing is exceed the given limit, right, then whatever the interest related for this exceed value should be disallowed. This is the main purpose of this. But this year there's a specific application as a provisions, right, for the some benefits for the entities. Whatever the finance cost incurred within this period is able to deduct entirely without concern about this limitation, right? This is only applicable for the 21-22. This is only applicable for 21-22, right? That's why here you can see allowable finance cost equal during the period. Allowable finance cost is equal during the period incurred value, right? And next, balance carry forward equal brought forward balance. What it mean, right? Once it is implementing this facility for the taxpayer, then there's another concern. If there's excess amount, only we can carry forward for the next 6 years time. But if it is apply this type of specific for the middle time, then that would be impact for the 6 years. Therefore 2021-22 is not considered to count the 6 years for regarding this balance available. That's why whatever the balance available should be take as a balance carry forward within this period. If there's any finance cost incurred only, we can use for this particular period, entire amount is able to deduct it, right? We are discuss the specific section, then ultimately we can refer with the business table and see whether there's any other things, right? Then section 19, there's no separate schedules, right? Whatever the loss which claim from this, then it is able to consider. Actually, this is related with the schedule 2b, right? Then to main calculation, there's a separate application for the losses. Then section 24, disclaimer written off balances, if it is applicable, if there's any details available, and if it is already taken the reasonable actions, then it is able to deduct it. Then section 15a, marketing communication expenses, this is introduced from this period. There's a definition for this. Depend on this definition, it is identified what are the things would related for here, right? uh, and as I mentioned earlier, right, is there any industry or company specific deductions, then you need not to worry, right? You can able to enter here, just you enter the descriptions of the expenses and you just enter the respective sections. If it is relevant, then you can enter the value here. Likewise, you can enter the entire deductions which related for your entity. Then ultimately we can concern about the section 11. Section 11 is the main deductions, right? Based on the nature of the business, uh, we can decide whether these expenses are necessary and whether these expenses are incurred for the production of income, right? Then if they're going to provide the list or any details, it may be a little lengthy one, but getting some reconciliation, try to identify these particular main deductions by comparing with the accounts, right? If you see, if you refer with this schedule 8i, there's a separate reconciliation you can see, reconciliation you can see, right? There's a 5 type of expenses, right? There's a 5 type of expenses. Then amount as per the income statement, we have to mention the value, right? Then specific deductions category, there's a two deductions already we recognize, business and investment, right? Then we can remove these. Then as your uh, identifications, what are the main deductions, if it is incurred during the period, if it is incurred for the production of income, there won't be any capital nature expenditure, right? Based on this, actually we can decide whether there is any main deductions, then you can enter the value. Once it is enter the value, right, then ultimately remaining amount would be the disallowable or exclude value, right? Then those amount you can recognize. Then if there's any disallowable one, what you have to do is you have to provide the list of this disallowable expense. Likewise, step by step we can do the reconciliation and finally we can identify the disallowable one. Once it is applied this direct method, right, all the respective expense and income we can consider. We are not much uh, highlighted space used for the disallowable one. Disallowable one automatically remove from our calculations. But if you are use the plus minus table, by starting with the net profit, we are mainly concerned about the what are the disallowable one, right? That is the difference between the direct method and indirect method. Okay. Right. Again, I move into the schedule 8. Schedule 8 business part. Then as a last item, they are deducting the any deductions which related for the temporary concession. Then we can get the final answer as well income other than the investment incentive. Other than the investment incentive, right? Why it is take investment incentive separately? This is applicable for newly started business, right? This is applicable for newly started business. uh, Once it is deducting this, investment incentive as a schedule 6, schedule 2, if there's any losses would created, that loss are allowed to carry forward within 10 years time, they can able to set off with the profit, right? This is a normal applications for the investment incentive, but depend on the level of the investment, it may be increased up to 25 years, right? To get the separate identifications, we are take investment incentive deductions at last. Due to deduction, then finally we can identify the what would be the final result, right? Then with that we can complete the assessable income from the business discussions. Then we can move into the next item for investment side, right? Investment income calculations are same and similar with the business application. We identify the income separately, we can remove the exclude income uh, as a exempt and final withholding payment. Thereafter we can identify the net amount derived. Out of this we are going to remove or deduct the some of the expenditure or deduction is applicable, right? Then main deductions we can apply same as schedule 8I we already discussed. By using the reconciliation of the expense we can identify this amount. Then section 12 and 18 mainly concerned to decide the finance cost. Schedule 8J is applicable, but this time no issue, right? Entire finance costs are able to deduct it. Then section 19 loss claim from the investment, there won't be any separate schedule under the schedule 8, but this is the amount that has going to decide by using the schedule 2B, right? Likewise total deductions we can recognize, then thereafter we can identify the assessable income from the investment. Then for just concern about the other income, it would not be a much complex one, right? Then very rarely we can be able to complete this. Most probably we can identify all the income under the business and investment, right? Then after getting this idea right, we can complete the schedule 8. Then we can move to the last schedule, schedule 9. Schedule 9 is including some informations that related for financial informations and some details for the transfer pricing, some informations for audit of the company, right? Then if you see the schedule 9A, right, some financial information you have to provide it, profit, net profit, other comprehensive income, then total credit sale, purchases, likewise some details you have to provide it. Then in addition to that, opening and closing balances for some identified asset you have to provide. Then thereafter you have to complete the schedule 9B for transfer pricing details, right? If there's any associate transaction, you have to tick with a yes or not. Then depend on this, then you have to provide the details. If there is a associate transaction, then you have to check whether you have to do the transfer pricing disclosure, right? If it is applicable, you have to complete and submit separate format by concerning with the particular details, right? Then you have to do the some you have to complete the some informations that related for the auditor, name of the auditors and IN number, and you have to include the details which related for the audit opinion, right? Those are the details you have to provide it, right? Then as a last, there's a blank space you have, right? This is the place where you have to mention the special remarks for regarding the computations and when it is filing the return of the income, right? Due to this specification of the company or specification of the industry, they would having some special deductions, right? Therefore to if we just pointed out any specific details that would be directly effect to decide the tax liability, right? then you can mention. Then I noted that, right, you don't mention the generic one, right? You have to mention the any specific data or specific information that would be directly affect to decide the tax liability, right? If it is so, then when it is review this particular return, officer will concern those informations that with that understanding they would having some fair and comprehensive review for regarding your return, right? By concerning every aspect, we are complete to discuss our tax return for company, uh, public corporations, club, NGO, charitable institution, fund, trust, and unit trust. I hope within this video you would get some value additions that will be great help to complete your tax return, CIT tax return. With that concern, we conclude our discussions. Hope you would get in some value additions. We will meet with the next video with some value added area. Thank you very much.